March retail sales came in above expectations, rising 1.4% in the month. Excluding auto purchases, consumer spending rose 0.5% in March. Here to break down the latest report and how the U.S. consumer is holding up amid tariff uncertainty, we have Jack Kleinhenz, National Retail Federation's chief economist. Jack, great to have you on here. Talk to me about this number. On a headline basis, it looks pretty okay. How much of that is driven by consumers kind of stockpiling ahead of any tariff policy impact?
Well, it's really difficult to measure that directly at this point, but I think we ought to take, some positive view on how much the consumer is still involved with the economy. Stronger retail sales reflected major fundamentals of consumers. We've seen still strong job growth. Personal income was up. Disposable personal income was up in February. We see low unemployment. And yet inflation is moderating, but consumers are spending. And I think it can be part and parcel of some of the front loading of spending. But nonetheless, I think we can't minimize the importance of the underpinning fundamentals.
Jack, take me into your evaluation of how consumers are spending, though, because it seems like, especially as we continue to get more readings from the New York Fed on where there are consumers that are continuing to tap into credit versus deploying any of the cash, and for one reason or another, whether they have the cash to spend or whether they just need a bridge and credit offers them that, we're seeing that start to trend continuously higher here.
Yes, there's no doubt about it that household balance sheets have some issues surrounding certainly credit and delinquencies. But nonetheless, if we look at the most recent credit report, it appears that balances have stepped backwards. I think consumers probably had a very strong holiday season and have decided to use some of their income to pay down. Nonetheless, like you pointed out, many consumers are still struggling and probably have an overhang of credit that they have to deal with.
At what point do you start to see consumer sentiment impacting actual consumer behavior, Jack? Because obviously consumer sentiment fell off a cliff in the latest consumer sentiment reading, hitting sort of rock bottom there. When does sentiment start to align more with behavior?
You know, it's very difficult how much unsettled consumer attitudes actually play into household spending. Because I like to look at hard data. I like to look at employment, income, and tariff-induced inflation. What we've seen actually going back over the last couple of years, that several of these surveys have shown to be very low in terms of consumer pessimism, and yet they continue to spend. So I think we're seeing really more of an attitude reflecting the uncertainty and uncomfortability of policies, but yet we're still showing consumers alive in the marketplace.
And so within your own modeling, Jack, I wonder, especially if you're looking back to that hard data on the employment side, where consumers' optimism index around employment and kind of present business conditions, they're watching that closely to see and make sure that there are job opportunities out there that are going to have wages that match up to keep pace or outpace what they're seeing on the inflationary picture side, which then comes back into the spending propensity as well. So I just wonder how you're kind of modeling for what we're seeing within employment versus what we may see eventually within that propensity to spend.
So you pointed out very importantly that wages have been strong, actually, relative to inflation. They've outpaced inflation, so that's been a strong ingredient into consumer spending. You know, the thing that I look at, or I kind of will believe that we'll see a significant slowing when we start to see claims data and layoffs data start to pick up. I think those are key leading indicators, if you will, of where the economy is going. And if you look at the most recent readings, we just haven't seen that. It is possible that retailers, businesses alike may be holding on to their workers because it's been hard to attract and retain over the last couple of years. So we're at a point that I think that the employment data is still, even though it might be a little bit lagging, is helping us look forward to a degree. Yes, openings have come down, but still there's significant amount of openings in the economy, and people are actually being hired. So overall, I feel stronger that the economy's fundamentals are still pushing us forward.
In the goods versus services, knowing that there's more need to spend on some of those core services that households need right now, the goods side, the product side, which companies or retailers do you think are best positioned in this environment right now, Jack?
I'm not in a position to, and it's kind of our policy not to specifically state anything about any one of our members. I could just point out to the fact that I think that as look forward, services spending has taken a large chunk out of people's budgets, and that actually, to a certain extent, is somewhat of a backstop against significantly slower growth, especially in light of these tariffs. Tariffs don't impact the service sector as much as it does the goods sector, and it eventually could impact the service sector. But to that extent, we're moving forward, but still with a lot of uncertainty.
Jack, really great to get your insights and your reaction to the news this morning on the retail sales data. Thanks so much for taking the time.
Enjoyed being with you. Thank you.